Where do you see the best value? If you look at, the next 11 months, and we're now hearing a lot more calls for Fed to actually normalize with a bigger interest rate increase instead of the timeline, does it change where you want to be invested in?
So at the moment, I'd still prefer developed markets over the emerging markets. And that's because I think investors will need to get further signs of confidence that you're going to see a rebound, not just in the Chinese economy, but also in other parts of Asia. And to understand that the markets that had such a torrid time with the Delta variant and the lockdowns there are going to be able to handle Omicron better. So at the moment, still favoring developed markets. I think within DM, you're really focusing on the cyclical sectors, the banks, the energy, the industrial parts of the market. But I do think that further out in the year, there are going to be decent opportunities to come within EM.
Yeah, and Hugh, I know we've been, waiting for the Treasury market to reprice for as long as I can remember, but is this the year?
I think there's further room for Treasury yields to rise this year. When you look at the pricing in that market now, really the pricing over the next 1 year to me looks reasonable. You've got markets pretty much assuming that 4 hikes are on the table for 2022, which I would agree with. Where I would disagree with market pricing is further out. It's about the terminal rate for the Fed, which still looks too low for me. I think markets will need to see the hikes coming through this year to understand that the US economy can simply handle higher rates, and that actually there's further room for the terminal rate to rise, which is what I would expect to drag Treasury yields, particularly at the longer end of the curve, higher through the course of this year.